Hi, this is Jason Fielder with the daily Forex report for December 28th. We're currently looking at the U.S.-Japanese yen pair. This pair moved higher, closed higher, pretty much created an inside bar. It did actually tag the high, so technically it wasn't, but it was pretty close to being an inside bar. Volume's pretty low due to the holidays. It is moving down, or moving sideways rather. We look for that to continue. Does have a possibility of moving to 92.24, possibly as low as 90.83. We also look for some resistance around 91.86 and possibly some support around 91.09. Okay, now looking at the pound US dollar pair. This particular pair closed higher today. It did form an inside bar, so definitely look for a breakout. We are looking for this pair to continue moving sideways, possibly moving as high as 1.6099, possibly as low as 1.5836. Look for some resistance around 1.6022 and look for some support around 1.5836. Now switching over to the US Swiss, this particular pair closed down today. It did have a decent range, did close the gap. Did form an inside bar also due to light volume due to the holidays. We are looking for it to continue moving sideways with a bias that is sideways. Look for it to potentially go as high as 1.0439, possibly as low as 1.0275. Look for some resistance around 1.0400 and look for some support around 1.0320. Okay, we have the U.S. Consumer Confidence for December being released tomorrow at 10 a.m. Eastern Time. Consensus on this one is that things have improved from 49.5 to 53.0. Definitely good news for the U.S. dollar. Now, let's take a look at the Euro USD. Just wanted to go through some stuff. We know it's light volume due to the holidays. If you drop down to the hour time frame, let me zoom in a little bit. I wanted to show you all some something that you could take advantage of. Basically, you're going to want to look for pivot reversals. For those of you that don't know that, I'll go through those real quick. They're pretty simple to identify. Basically, we're looking for a higher high than the bar before it and the bar after it. So this would be considered a pivot high bar, which you identify when this bar opens. Here's a pivot low because it has a lower low than the bar after it and the bar before it. And this is what we call a one qualifying bar because there's only one bar on each side. This is a pivot low because it has a lower low than the bar before it and after it. So that's what we're looking for. It can be a pivot high or a pivot low, so that's what we're looking for. Got a pivot reversal indicator, actually, that I'm going to use to show you all what I'm talking about. Let me go ahead and move this out of the way and close it. There we go. Keep getting this. Hang on one second. Okay, here we go. Got it set to 1. And let me zoom in a little bit and I'll show you kind of what we're looking at. The market overall has moved sideways over this last session. So let me show you how you can take advantage of that. Pivot reversals typically are used for breakouts, but if we know the market's moving sideways, we can set it to a low qualifying bar on each side and use it for a counter trend. I know the arrow is going to be opposite of what we're looking for, but basically what we're looking for is for the market to hit these areas of support and resistance, and instead of pushing on through them, actually reversing at those points. Okay, so you can see that if you went short here, you bought here, and then you went short here, and then you bought here. Let's just go through those and kind of show you where you would be currently on that. Let me zoom out a little bit so we can see the whole session here. This first short would have produced 22 pips worth of profit. This buy would have produced about 21 pips of profit. Now this second trade, or the third trade rather, that's 19 pips up, 20 pips up. On the hour time frame, using a 30 pip stop loss would be adequate for this trade. So this wouldn't have gone high enough. 30 is right around here to stop you out. get another pick up another 10 pips there and then currently this one of course would be down roughly 9 pips. So overall, had you used this strategy over this last session, from here to here you would have gotten about 21, 22 pips, another 21 pips here, and then another roughly 10 pips here. Altogether you're sitting at 42 plus 10, you're looking at 52 pips. You subtract out your 6 pips worth of spread there, and you're going to be sitting right at the 46 level. So 46 pips over one session, just doing some counter trend trading using pivot reversals. So that's another way to use pivot reversals. Well, that pretty much wraps us up for today. Until next time, this is Jason Fielder. Good trading.